Here we have the 4-hour price chart for SoFi Technologies Incorporated, stock ticker SOFI. So as we can see here, the stock is attempting to post a recovery rally after falling to lows right around the $6 mark. However, there has been a lot of up and down activity, whipsaw price activity in both directions. So it will be very important for investors to identify some near-term risks and important support and resistance levels so that proper trading strategies can be implemented going forward. So as we currently see things here, we have posted a bit of a higher high coming in at $7.56. Of course, this is a moderate improvement on the $7.52 high that was seen previously. Essentially, this is the price high that was posted during the August 12 trading session. So as we can see here, this is a bit of an incremental high, a higher high, and it does help support the outlook for the stock here going forward. You would have liked to have seen a bit more follow through at this point. Seeing a share price gain of only 4 cents is a little bit disconcerting here. But if we sort of zoom into these price candles, we can see that the most recent body on these two price candles are fairly significant, fairly strong, and they do suggest that near-term support levels have moved up to roughly $7.20. So as we can see here, the next level to watch to the top side does come in a bit higher, and this would be determined using Fibonacci price analysis. One factor that I do want to mention for the stock going forward is that there is a very significant event risk next week. It might seem as though it's unrelated, but I think that's sort of a wolf in sheep's clothing, so, sort of an event that might fly under the radar for some people that are specifically focusing on this stock. What I'm talking about here is the Nvidia earnings release that will be posted next week. The second quarter Q2 earnings report from Nvidia, in my view, is going to heavily influence the market, and it is going to impact share prices, not only on Nvidia stock, but in the S&P 500, the NASDAQ, the Dow, Russell 500. And I do think that the ripple effects will be seen in SoFi as well. It's going to be seen throughout the technology space. This is sort of lumped in. It is finance, but SoFi does tend to get lumped in with technology stocks. So given the fact that we have seen this run higher here, this does put share prices on a bit more of a precarious footing. Because this does mean that the stock could start to retrace some of these gains if we start to see a sell-off in the broader market. So Nvidia's earnings report next week does have some very lofty expectations. The market is looking for 125% annualized revenue growth and 112% EPS growth, earnings per share growth. So those are huge numbers. And this does not mean that Nvidia cannot beat those numbers, but if guidance for the coming quarters comes in weak, I do believe that the market is going to sell off, and that is absolutely going to have an impact on SoFi Technologies stock as well. So looking to the downside, if we do start to see prices move lower, if we do see a sell-off in the broader market, losing this $7.20 level will be fairly significant for the stock. And there are a few different reasons I say this. Specifically, what I would point to here would be the exponential moving average cluster, in addition to this recent price low that was developed during the August 22 trading session. So specifically, we can see all of those technical factors sort of aligning right in this area here. I can even remove this trend line here so we can see this a bit better. But if we sort of zoom in here a bit, we can see that this historical price low is really coming into contact with all four of the major exponential moving averages. And you have to remember, this is a 4-hour price chart. This isn't like a 5-minute price chart. So at the very least, you would have to look at this as though it's an intermediate term time frame. This is not a short-term time frame. So what that means is that these moving averages are more important, because it's not as if you're looking at a 5-minute chart or something like that. So the way things currently stand here, this is a very critical line in the sand here that will need to be protected if share prices are going to move higher. And if we do see a major sell-off in the market next week, I would expect this price level to come under pressure. In addition to that, we have to look at the indicator reading, which currently does show a bearish condition in the overall momentum direction. So as we can see here, this ultimate price high that came in at $8.06 during the July 18 trading session, this was a significant price move to the top side. And as a result, share prices did move heavily into overbought territory. Anything over 70 would be considered overbought territory. And here we can see that the indicator reading itself is trading at almost 83. So we wouldn't quite be into what would be considered extreme overbought territory. That would be anything above the 90 level. However, a movement above 80 is still fairly significant. And this did ultimately generate this bearish indicator condition that we're seeing currently. So all of this did have an effect on current share price action, even though this might seem as though these recent price highs were somewhat in the past and maybe in the rear view mirror. I don't think that that's currently the case because this has created a bearish condition in the relative strength index itself. So as long as this continues, this does suggest that share prices moving higher like this are a bit vulnerable. And if we can spot areas of resistance to the top side, this could suggest that we might be in store for a reversal point in this stock somewhat soon. So if we're kind of drilling in here a bit once again, I can point to this 78.6% Fibonacci retracement level, which currently comes in at $7.62. So that would essentially be this area here. As we can see, we almost came into a test of this level. However, the share price itself did fail to reach a complete test here. We only saw price highs of 756, which is interesting because we did break above the prior price highs of 752. So in my view, the reason that we're having a bit of trouble here does come from the fact that this 786 retracement is relatively close by. We're talking about I should say that differently. We're talking about roughly 6 cents in share price movement. So this is a somewhat small number. And this does suggest that the share price itself is having a bit of difficulty overcoming this area due to the fact that this is a fairly critical support. This is a fairly critical resistance zone that's seen just overhead. If we were able to break above this level, for example, if Nvidia does post very strong earnings results and very strong guidance figures for the coming quarter, this could send share prices above this fib level, and that would be a significant event because we do have some further resistance levels that are somewhat nearby at 795 and 806. And then if we were able to break above there, we could see share prices move significantly higher and start to generate better momentum into the positive direction. So here's the current market analysis for SoFi Technologies Incorporated, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.